an incredible upgrade to your guidance. I suppose it makes you wonder how sustainable that is based on what we see on shipping rates and what you expect to see on volumes. So how sustainable?
Well, we expect to continue to see a very, very strong freight rate environment for Maersk, because we have a very large portion of our business that is tied up in contracts, long-term contracts, and they've been closing at ever higher levels this year. We expect the third quarter very similar to the second quarter, and then we expect to see what we call normalization and decline in freight rates starting in the fourth quarter this year. Clearly, volumes are weak, particularly into Europe, less so into the US, but we also still have a lot of shipping capacity tied up in congestion around the world.
Soren, good morning. I wouldn't want to play poker against you because it's a great set of earnings, and yet you're keeping a very, very straight face out there. But on that note, governments have talked about taxing shipping companies more. Customers have asked about capping freight rates. Wouldn't this be fair? Are you concerned about this dynamic?
Well, clearly around the world, there's a tax discussion ongoing now for container shipping or for shipping in general. We are unique in the sense that we are being taxed based on the tonnage that we own and operate, not on the earnings. For many years, that's actually been an advantage for governments because we have had quite high effective tax rates because of low earnings. But in 2021 and 22, it's clearly not an advantage for governments. What's important for Maersk is that we have a level playing field globally for shipping, and we are a truly global business and have to compete globally. So level playing field is the most important.
Okay, a level playing field. Can I ask you about, you've mentioned the weakness of container volumes mainly into Europe, Soren, which makes me think of threats coming from the war in Ukraine. Are you seeing developments around Russia's war in Ukraine? We're nearly at 6 months there. To what extent is that still impacting global trade?
In a couple of ways, container trades. First of all, of course, the consumer confidence in Europe is low. I think it's probably as low as it's ever been because we have a war on our doorstep, and that doesn't tend to make people very optimistic. Secondly, the Ukraine is a big provider, and so is Russia, by the way, big provider of truck drivers into the European markets, and they're not here anymore, and that's why we see some of the congestion we see in the ports. It's very hard for us to get the containers out of the ports because of lack of truck capacity. And congestion in the ports absorbs capacity, and that helps keeps freight rates very high.
Soren, you talked about consumer confidence being really, really low in Europe, and your company really is a bellwether for global trade. And in that context, how are you feeling about the world economy right now, and which region do you think is most vulnerable? Is it Europe?
Yeah, clearly we're seeing the biggest weakness in Europe. In the US, the imports into the US still to this day are way above the levels we saw, pre-pandemic in 2017 to 2019. So, and we also see in the US that the consumers have lots of savings stemming back from the pandemic time. So we expect the US to do better than Europe in the short and medium term.
With what you've told us, Soren, about expectations around volume and the freight rates that you'll be able to achieve going forward from here, are you planning to order more vessels? And I know that you have already made announcements about vessels, but are there conversations about ordering more than the market already knows about? Just trying to get a sense of whether further expansion is still a possibility.
We operate more than 700 ships, and we have a constant replacement need. Our strategy on the container fleet is actually to stay more or less stable, so we're not looking to expand our capacity. We have plenty of capacity that is tied up in congestion today, and that capacity will be released in the coming year and years, and we will be able to use that to grow our business without ordering new ships. Actually, most of our investments now are on the land LANDSIDE in our logistics business, which is growing. Actually, I call it dramatically. I mean, we've now had 6 quarters of more than 30% organic growth, and on top of that, we are adding acquisitions. So that's really the focus of Maersk to build a global logistics company.
Soren, so if you're keeping your global shipping fleet stable numbers generally, does that mean that you're no longer as vulnerable as the industry used to be to an economic downturn of overcapacity? Because that seemed like the kind of boom and bust. Buy a load of ships in the boom times, suddenly have way too many ships in the bust times. Does that mean you're now much less vulnerable to an economic downturn?
Well, I think for Maersk, we're clearly building a business that stands on more legs and in particular on more landside logistics. But we also believe that the pandemic has shown everybody, including us, that what matters in the world is not actually how many ships exist. What matters is how much capacity is deployed against the demand that is out there. And I think that the shipping lines in the future will be operating much more like for instance the large package Courier Express and package companies, UPS and FedEx and so on, where they provide the capacity that is needed, but not more than that.
Okay, and Soren, we've talked about your landside expansion a number of times on this programme. On that front, do you have M&A plans that are currently in the works? What are you planning to do with all that cash?
Well, we made 3 acquisitions this year. We closed 2 of them in the second quarter, and we still have the biggest one, LF Logistics in Asia, which will provide us with 235 fulfillment centers in Asia to close. We hope to close it this quarter. Clearly, that will absorb a lot of, if you will, people resources in terms of all the integration work that we need to do. Obviously, we have firepower to do more, but I would like us to see us successfully integrate what we have acquired now before we take the next step. We are also announcing today that actually we are adding to our share buyback program another $500 million per year. So we now have a commitment of $3 billion per year for the next 4 years. So our shareholders are also seeing increasing cash returns.
Okay.